heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Let's get to it with Nvidia back beating Microsoft in market capitalization. We talk with a top shareholder in the chip giant. Meanwhile, Peloton jumps on better than expected earnings. We talk turnaround efforts as it pushes for profitability. And Apple's App Store reorg. We discuss the executive shakeup as amid a regulator scrutiny. That and so much more coming up. But first, let's check in on these markets because look, we're tussling ahead of the all-important speech coming from Jay Powell. Of course, we're all eyes on what is happening in Jackson Hole tomorrow. We're down about 0.1% on the Nasdaq 100 more broadly. This is as we see more of a tug of war of who is going to be the most valuable company across some of the benchmarks. Apple still reigns supreme, but Nvidia managing to eclipse Microsoft. Let's move on to some of the individual movers in terms of the earnings sector, though, because we are actually seeing individual companies on the move. Look at Peloton. Yes, it's only worth $4.28. However, we are seeing a 27% move. This is on its current quarter, the quarter they just reported, the fiscal fourth quarter, coming in better than expected. Forecast not looking that strong. We're going to delve into it with a key analyst a little bit later. Zoom also on the up and up. We're more than 11% higher. Sales forecast for the current quarter beating analyst expectations. Kelly Steckelberg, actually the CFO, is announcing her retirement or moving on from the business, but the departure isn't a result of any disagreement, so the company says. We're seeing Snowflake, though, down more than 13%. Is the AI part of this equation not running strong enough as a software business? That is the key concern as revenue forecasts just miss expectations. We'll do a deep dive on that a little bit later. But now, look, let's get to what has been the market capitalization story that we referenced. Nvidia eclipsing Microsoft again. The two tech giants really have been jostling over the world's second most valuable company title a few times over the past week. I'm pleased to say Emily Graffeo joins us to talk it all through. And Nvidia, just as we look towards earnings, August the 28th, still seems to be getting the momentum from who's purchasing what from them.
Yeah, I mean, that's exactly right. We haven't had Nvidia's earnings yet, but from the earnings that we've seen so far, we're noticing, and investors are noticing, that these big tech companies are still willing to spend a lot on AI, and Nvidia is the biggest beneficiary of that. If you look at just Microsoft, Amazon, Alphabet, and Meta, all in their earnings reports, they kind of underscored this idea that we want to continue to spend on AI. And I was looking at a note this morning from Nick Kolas of DataTrek, and he pointed out that for Amazon, Microsoft, and Meta, the operating cash flow growth exceeds CapEx. So that means that these companies still have a lot more cash to deploy on the CapEx. So he takes that as a sign that the companies will continue to spend even more on AI, and that's going to benefit Nvidia. Whether or not we'll see that in the results next week, that's really the big question. But like you said, the stakes are very high right now, especially after TSMC earnings were good. Everyone's just watching for Nvidia to see if they can keep up with that.
And look, there's a load of anxiety. We have seen how basically bullish the market was and a few concerns within the market at the beginning of August, and we saw a significant sell-off, and we've actually been seeing the sell-off since July. What do flows tell you in terms of people's appetite to get into a company that has got such a high market cap?
People are buying the dip. It's surprising because all year I keep asking sources, okay, well, is it time to finally pivot out of big tech? But we're actually seeing people, the rotation into small caps, that's really not a theme anymore. Investors still have this appetite to hide out in big tech, even amid concerns that the economy is slowing. If you look at the flows, QLD, this is an ETF that goes 2x QQQ, so big tech, but going ultra bullish QQQ. It's taken inflows nearly every day for the last 2 weeks. Wow. And just in the last session, it took about $250 million in, which is the biggest flow since April. So even after the sell-off that we saw to start August, we're still seeing that appetite to buy.
Okay, we're seeing some long positions in this market. Emily Graffeo talks us through it when it comes to Nvidia. Look, let's talk about one of those longs. Tony Wong is one of them, one of the key holders of Nvidia, portfolio manager at T. Rowe Price. T. Rowe, in fact, Tony holds what, about 2% of Nvidia's shares outstanding. That's $56 billion worth. That makes you the 7th largest individual shareholder as an overall company. But at your fund, the Science and Technology Fund, why remain bullish on Nvidia?
Yeah, well, I think there's a lot of reasons to still like the company. I mean, they've driven accelerated compute about 1,000x over the last 10 years, and they continue to be the leaders in the space. And AI is right now just too important of a area to let up the gas. And so I think that the large companies will still spend. I think there's a tension of like, just, what does spending more mean, and does that meet expectations? And that's what the market's really going to be focused on going forward. And so I think like there's a lot of great reasons to like the stock long term. I think that at the same time, you have to remember that semiconductors are very cyclical and they're also secular. So I think that's part of our job to navigate the environment.
So basically, brace yourself for potential short-term volatility, but longer term, you're still bullish on money coming into the likes of Nvidia. But does it broaden out? At the moment, it's felt like Nvidia is the only picks and shovels game in town. You started seeing Broadcom doing relatively well on some AI wins. What do you make of Nvidia really remaining the main place to win on AI?
Yeah, well, I think that the reason why NVIDIA has been so good in terms of it's because it's a platform, right? It's not just a chip. And so they have a big ecosystem with lots of developers writing on their code and CUDA. And so it's all built like an ecosystem platform. And so I think that's why it's such a defensible business. And, it's available everywhere. It's ubiquitous on the cloud. You can have it on-prem, and they've got great support for their chips. And so I think that's largely the reason. I think it could be changing in terms of the complexion going forward is more concentrated among the hyperscale players, and they're very sophisticated buyers of chips. They can do a lot of their own software. And so I think there will always be a balance between the hyperscale making their own chips with like significant volumes. Like you've seen Google with their TPU, that's very aimed at search.
Yeah.
And so I think that will continue, in other ways. And so I think they can coexist essentially.
I like that point that you've been making, and we were just hearing how DataTrek is seeing the same thing, that there is a willingness on a capital expenditure perspective coming from hyperscalers. You were in a number of those hyperscalers, Microsoft, Meta, for example, Alphabet, and Meta seemed to manage to nuance the argument of why they put money in there. Whereas Alphabet, people were worried about just spending CapEx at all costs. What do you make of the hyperscalers' decision to keep on putting money in?
Yeah, I think that Mark did a nice job of kind of illuminating why he's spending so much in AI, like with personalized chatbots and like how that can go through the platform. I think that you shouldn't count Google out at the same time. And they have a lot of AI expertise. They've been leaders in the field. They have great chips as well. And so, I think that it's too early to call who's going to be the winner or loser. They all have big platforms and user bases where they can scale their AI investments. And so, I think it's too early to call like who's going to win or lose. But at the same time, they all have really great businesses.
Return on AI. ROAI is this horrible acronym that's suddenly coming into the marketplace. What do you make of, though, the returns that we need to start seeing? You're a key holder in Apple. I think, again, T. Rowe Price overall is about the 7th biggest holder of Apple stock out there. That company, again, managing to tell us why they can be an AI bet. Where does the money end up flowing in terms of return on AI investment?
Yeah, I think that we'll be looking for return on AI investment. I think Apple specifically is in a great position because they're kind of the ecosystem owner, right? So they can integrate great technologies into their phones, into their hardware, and just like they did with Google Search. And so they didn't have to develop Google Search, but they definitely benefit from users using Google Search. And so ChatGPT is the same thing. Going forward, they don't have to develop a frontier model. They can integrate it with their phones. Now, I think you can argue whether long-term a company should own the frontier model here, but right now Apple's strategy is really focused on what they're really good at, which I think is design and integration with your life of their products and services. And so it's an interesting way to like be a capital light player in this kind of AI proliferation here.
It's interesting that you're in Salesforce, and that's been a company that's trying to show off its AI prowess, but make clear that they are going to be able to reap rewards from their investment. Do you think it can?
I think that Salesforce is a really sticky software company. I don't think it's going anywhere. It's kind of like their kind of game to lose, I think, at this point. And so I think they have a good moat. They have AI products that are coming out. I think the question is, like, how do they price them? How do they drive ROI for their customers? And I think the whole space is kind of going through this seat versus consumption of AI. And so like if AI works too well, you might not have many seats that you need. So I think there's that business model that's being figured out. But I do think that if you look at startups that are in the space, it can be hard for them to get into large enterprises where Salesforce sits, just because you need to let them into your whole system, and that can be actually a pretty big moat.
Well said. There has been other companies that we've been questioning how much they can align themselves with the AI tailwinds. One of them, Cisco, for example. Dell, initially we thought, yes, really within this ecosystem, they're going to be there for the servers, for the networking. And then every now and then we get caught off guard and feel that perhaps they're not so well placed. What do you make of like the bottoming out story of a Cisco, for example?
Yeah, well, you know, I think that what we've seen is that kind of legacy tech has in some ways reinvented itself like Dell and become an AI beneficiary. I think here Cisco has been largely kind of not on the AI beneficiary list. And I think in the recent quarter, they have some kind of AI revenue coming through. The business is bottoming. It's a value idea. It's got a lot of a good amount of cash flow and dividend yield. And so from that aspect, it adds a little bit to the portfolio that, the rest of the tech stocks might not offer. And so, I think that there's a place for various stocks in portfolio construction, and with bottoming fundamentals and potentially like an attractive valuation, it could be good.
You've been great at articulating why you believe AI is such a winning story, but juxtapose that with the overall macro picture here. We see the market get hit on the fact of whether or not we will have interest rate cuts. How much do you factor that in the here and now when you're looking at a portfolio allocation?
Yeah, I mean, it's definitely an area that you can't ignore. The macro is super important. You have to be aware of like what's going on top down. At the same time, I think that we kind of take it stock by stock and look at where expectations are, like the likelihood that they beat expectations, how well the company is positioned. So no matter even like what direction the macro is going, like you should be able to like create alpha either way, just by relative selection of stocks. And so, when I think about kind of Nvidia, like a lot of it, it's going to be a really big print here. Like we've never had this amount of debate, I think, in terms of, are we kind of near the cyclical peak or is it going to continue? And so, we do a lot of fundamental work to understand like kind of where the products are positioned and how to think about the setup of the stock.
Look, when you're managing the Science and Technology Fund, does it suddenly amaze you that the whole world now thinks Nvidia is a macro moment? Its earnings might dictate the rest of the benchmarks.
Yeah, it's a phenomenal moment. I mean, if you think about it, the stock has just been amazing. I remember I started covering it about 7-8 years ago, and you would never have thought it would be $3 trillion. So everybody has like underestimated the company, through like multiple cycles. And so it's been, phenomenal. It's because, they offer so much value. And like we've seen this like kind of AI vision of accelerated compute play out. And so I think everyone now recognizes it. And so, it is pretty phenomenal. And I think that part of the reason why Nvidia is so important is because there are a lot of AI multipliers through the economy, and there's a lot of market cap creation because Nvidia is doing well. And there is this like kind of idea that long-term value creation, productivity driving through the economy. So I think it's a big moment for the market for sure. And so we're excited to see what happens next.
Political risk in any way affect that?
Sorry, could you say that again?
Political risk in any way affect that?
The macro risk?
Yeah, the politics, the element that maybe we have a change in the White House. Would that in any way change the innovation focus?
Yeah, it's really hard to kind of call politics, I think. I think there's a tension of like how much you regulate AI and Nvidia as such a dominant player, perhaps, pushing computing versus like we are in a AI space race kind of with other countries. And at the same time, we're trying to kind of stymie China's efforts to develop AI. Like, I think that we can't also, it's hard to then also like kind of restrict our own companies. So my view is that like the space is moving so fast. We're trying to push the envelope here. I don't think, politics will really change that, given how important AI is to the economy in the future.
Well said. We really appreciate your time today. Such an important shareholder and indeed view on AI from T. Rowe Price, Science and Technology Fund Portfolio Manager, Tony Wong. Stay well. Look, there's an update on a story that we've been following. Italian search and rescue teams now say they have retrieved a fifth body from a sunken yacht off Sicily. British tech tycoon Mike Lynch and Morgan Stanley International Chair Jonathan Bloomer are among those feared to have died. The fifth body was recovered Thursday morning as search on the wreck resumed for a fourth day, according to an Italian official. No statements identifying any of the bodies have so far been issued officially. Now we move on, and coming up, we're going to be assessing Peloton for you. Shares, as you'll see, on the up and up, as maybe we see signs of a turnaround paying off. Details next. This is Bloomberg. Plenty of earnings to be digesting. Look, let's take a look at both Zoom and Snowflake. Zoom, as we see, on the up, more than 12% higher. This is the biggest move since November 2022. Forecast looking good, even as the CFO is handing over the reins. Kelly Steckelberg saying she's going to be moving on from the business. Meanwhile, Snowflake, though, a polar opposite perspective here. Forecast not living up to expectations, worrying about AI, and we're down more than 12%. Let's get to Brody Ford on these, because Snowflake, first and foremost, what's the worry, the anxiety here, Brody?
What's interesting about these two companies is it's a similar set of concerns. Can you expand from a hit core product, Zoom with video conferencing, Snowflake with data warehousing, to a new set of products, expand your portfolio, especially with AI? As it relates to Snowflake, yeah, it's that concern that you were a hit viral product a couple of years ago, but a lot of folks want the AI products now. These are things that people associate more with Databricks, increasingly with Microsoft. And so Snowflake is working to expand. It has released a lot of new products this year. But what set off investors is them saying last night that maybe we're not going to see money from them until fiscal 2026. And that's further out than folks were hoping.
Meanwhile, I just want to pivot to a story that you've been chasing throughout, which is Autodesk and the accounting risks there. Can you just get us up to speed with what Starboard, the activist investor, is saying?
Yeah, essentially, Autodesk had an issue with their accounting earlier this year, caused some disruption, and now activist investor Starboard is saying that there's got to be some accountability. This morning, they have a statement out saying that the board needs to hold management accountable and really ask themselves if the CEO, who, interestingly enough, has been there since a previous activist episode, is still the right guy for the job.
We'll keep an eye. I know that's one that you've been breaking a lot of news on, Brody Ford. We thank you so much on all those stocks. Meanwhile, sticking with the earnings story more, and Peloton beating estimates on this quarter just announced amid a turnaround effort that does look like it is working. However, the outlook for revenue, a little bit of a concern. This comes as the company is continuing to search, of course, for a new CEO. Shweta Kajuria is with us, of course, managing director at Wolf Research. And you put your note out, you're sort of saying that they're rolling along more broadly. What did you make of the fourth quarter versus, though, the first quarter forecasts?
Well, first of all, thanks for having me. I guess the results for the fourth quarter were pretty good, partly in our view because the guidance itself was a bit conservative, but also because they did a lot of cost cutting. And so revenue, EBITDA, as well as connected fitness numbers came in relatively in line or better, slightly soft in connected fitness actually, but nothing to worry about. The guidance clearly was lower than expected on all fronts on the top line, but better on the EBITDA, largely because of the restructuring. Our view is that this is going to be a very difficult transition. We don't think that you can grow by cutting costs. They'll have to eventually show top line growth, and that they're not tapping out of the market. With a down 9% decline in year-over-year revenue for next year, that's not a good sign, whether it is macro or whether it is pulling back on their marketing spend because they have to, and whether it is re-strategizing as the new CEO comes in and there's this leadership change. It's just not a good sign.
Where should they be leaning into? Is it more app users? Is it more online and subscription? Should they back away from the hardware? Or do they need to re-umph some of the marketing around the hardware, which for many there have been too many recalls and worries over?
Well, it's a very tough challenge. One is because their hardware is premium quality or premium priced, and so it's not for any average consumer, which is why they're going through with the rental as well as the refurbished. In our view, we think that they should focus more on the app subscription piece, even if the churn is higher, just because of the margin profile. If the app product experience is very, very good and it's superior to everything else in the market, even if it is a crowded market, they could gain share and show some real margin expansion while they deliver product expansion, whether it is in international markets or in North America. The other question with hardware is there any way they can bring their prices down for hardware, whether it is through supply chain changes or product innovation or technology innovation to drive greater adoption? Because an average consumer, it could be prohibitive.
And therein lies the issue, is that suddenly it was a luxury one and everyone pivoted. Just very quickly, Shweta, the CEO, you're expecting that anytime soon?
Yes, they are expecting to make an announcement before, or at least during the next earnings call. So it'll be another quarter. We think that they may lean towards a retail CEO. I'm not sure, and I don't want to speculate, but I wouldn't be surprised if a retail CEO is brought on board.
Shweta Kajuria, great to have you on. We thank you. Wolf Research there. Meanwhile, talking about succession planning, Disney has a new chair in its succession plan committee. It's former Morgan Stanley CEO James Gorman, who will be taking the lead in the search for Bob Iger's successor. Now, Gorman joined the Disney board earlier this year and oversaw the recent succession process, of course, at Morgan Stanley. Coming up, Xiaomi goes for growth over profits as it bets big on EVs. We're going to hear from the CFO. This is Bloomberg Technology. It is time now for Talking Tech. First up, Baidu sales stall. Revenue for the 3 months ending in June came in below estimates, dropping to $4.7 billion. This is the company transitions from ads to AI amid an economic downturn in China. Now, Baidu founder Robin Li has hopes for creating China's equivalent to ChatGPT. Plus, Xiaomi may be set up for a sales boost with potential revenue growth for 2024 near the mid-20% level, helped by its premium phones and new electric vehicles. Now, according to Bloomberg Intelligence, China's tech giant may experience some tailwinds from its expansion of overseas channels, internet services, and its EV push, of course. Here's what the Xiaomi CFO told Bloomberg earlier about the EV growth.
So if you look at our delivery right now, we are over 10,000 vehicles that we delivered per month in June and in July, most likely in August as well. So we've been able to scale our production facility as well as our delivery capabilities.
Alan Lam there. Now coming up, we're going to be joined by Robert Lay, senior crypto analyst at PitchBook, to walk through the company's latest insights into the world of venture capital in the crypto space. From New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde. A quick check on these markets. Individual movers to start. I'm seeing what is happening over at Paramount, and we have to reference it. Another upped bid, a $6 billion bid, coming from Edgar Bronfman Jr. He's raising his offer for, of course, the CBS parent, and it's all according to people familiar with the proposal. It's all about, of course, trying to upset what is already in plan, the merger with the independent producer Skydance Media. So we'll see how that continues to bear out. Synopsys is off by 0.9%. This, as we see, actually, its third quarter revenue and profit rising amid this race to AI. Many on the street had actually liked the set of numbers overall. Solid results, said Bloomberg Intelligence. KeyBank saying they were positive. But though the revenue beat was smaller than our previewed scenario. Synopsys off by 0.9%. Broadcom, though, doing well. Seems to be a note out from JP Morgan really talking about how Broadcom is managing to sign on some new key clients when it comes to AI provision. So another chip maker to keep an eye on. Meanwhile, we just also wanted to keep an eye on what's happening in the world of crypto because, well, overall benchmarks are on the downside. NASDAQ off by 0.5%. S&P 500 had been near that all-time high. We're back lower by 0.3% as we eye Jay Powell and, of course, what's happening at Jackson Hole tomorrow. Within that risk-off tone, Bitcoin is off by 1.25%, but we're still at that $60,000 level. But let's just talk about the inner workings of what's happening in the crypto space right now. Binance, we understand, is hiring 1,000 people this year, with many earmarked for compliance roles. That's as the crypto exchange's annual spending to meet regulatory requirements has been boosted, including US oversight under a plea deal. It's now apparently going to be topping $200 million. Bloomberg's Shonali Basak joins us for more. And really, this is as we see a new leadership come and really trying to make sure that they're taken seriously by regulators and ticking more boxes than they were.
Well, what's incredible here is that you've had CZ step down after that plea deal, or in the wake of that plea deal, rather, and Richard Teng take over in the United States, really because they have monitors here assigned to them from the U.S. Department of Justice and also through the Treasury's Financial Crimes Enforcement Network. Now, what he didn't say to us is whether he met with the SEC here as well, who is suing Binance. What's interesting is this $200 million figure is an increase over the last couple of years, and he told us that he expects to increase that figure more. And of the 1,000 people he's hired in the past year, 500, more than 500, are solely really dedicated to compliance and regulatory matters. That number will go up to about 700.
Wow.
Hundreds of people really being hired for compliance. So when it comes to the goals that Binance has here, compliance is certainly chief among them. Remember, Binance is also privately held, and CZ is still a major shareholder here. So what we don't know, like you can look at Coinbase's stock and their financials every quarter and know how well they're doing in the crypto boom. How much is 200 million compared to how well they've done this year? Certainly they want to clear up a lot of these compliance issues so they can continue to grow around the world. They are seeking to grow around the world. We don't understand quite what their strategy will be in the U.S., but their compliance issues being cleared up here will set the stage for further clarity on what that could look like in years ahead.
I mean, this new CEO says he's a regulator at his heart, always has been, so he's got a lot of experience there.
He does have a lot of experience, but you can't shake this idea here that you still have CZ, still a major shareholder. He's not allowed to really be involved in the company and its operations, but still is able to have this financial claim over Binance ultimately. In the past, CZ has received dividends through that stake. I don't believe he has had any this year, but it is unclear on what that would look like for the future or what the parameters would be around it. So certainly a fascinating thing. Caroline, I know you guys are also watching something else here. When
in
it
Miami.
comes to Binance. Exactly. I think this is a fascinating one, too, because claims being resolved all over the place, including with Binance's promoters. Let's say Jimmy Butler, the Miami Heat basketball star, and also Ben Armstrong, a YouTube influencer, agreeing to resolve claims to the tune of $340,000 here from a class action lawsuit that also cites that Department of Justice issue and the SEC issues that Binance has been facing. And this idea here that clients have been privy to buying unregistered securities by the bequest here of these promoters that really helped push more people into these tokens.
Certainly was a hit for a few influencers over the years. We thank you so much, Shonali Basak, on all things crypto. And look, we actually want to stick with crypto in the fundraising environment, actually, because it's increased slightly in the second quarter of this year, according to the latest PitchBook data. Startups secured $2.7 billion across 503 deals. But there was a 12.5% decline in deal volume compared with the previous quarter. Let's bring in Robert Lay, senior crypto analyst at PitchBook. So what's happening here? A fewer amount of businesses are getting bigger checks?
Hi, Caroline. Yeah, thanks for having me again. So like you said, although deal value is up, the deal count is down. So what this means is that investors are writing larger checks into a smaller number of projects. And so what you're seeing is really a concentration of capital into, the teams that investors think are the strongest and the ones that are building, projects that have real value. And, I think also when you look at just the total deal value that's being invested, part of what's driving this is also a lot of the crypto funds that were raised in 2021 and 2022, they're nearing the end of their deployment periods. And then there's also new capital, new funds that are coming to market as well. So we do expect a lot more capital to be invested and these check sizes to, over time, over the next year, to become larger and larger. And we kind of saw this in the last cycle to just see that.
Okay, I mean, that's not going to be music to many people's ears that basically they're fighting a timeline issue here and going to have to start allocating as quickly as possible or hand it back. Where are they allocating? Where are VCs seeing value being created? What problems are being solved?
Right now, we've been seeing a lot of capital go into infrastructure. Even like last quarter, we saw $200 million plus rounds going to Monet and Berachain, which are layer one blockchains. I think the challenge is that they're from our views, there's way too much capital going into infrastructure and not enough going into applications. You go back 2 cycles ago, most of the capital went into applications, Coinbases and Circles, right? The last cycle was, FTX and BlockFi and Celsius and Dapper Labs. I think at the end of the day, you still have to go to where your end users are. And right now, investors are not funding projects and applications and services that are serving those end users, whether they're retail end users or whether they're business end users. So right now, most of it is going to infrastructure, and we just see way too much capital going into that area. But I think that's going to change over the next year or 2 years, where you're going to see more investment dollars go into the application layer.
Why is there a reticence to get into the application layer?
Again, with the last cycle, we saw what happened. I just mentioned those names, right?
Yes.
FTX, BlockFi, Celsius. So there's a huge resistance to get into that because of what happened. There's also a regulatory overhang. Investors think a lot about that because a lot of these projects have tokens associated with it. But it doesn't necessarily have to be. We saw Farcaster, they raised a $150 million round in May, and they're building a decentralized version of Twitter. So I think that is kind of the bellwether where we're going to see investment go. Like Farcaster doesn't have a token, and they're serving end users who are using social media, for instance.
It's interesting that you mentioned tokens and also still nervousness. I mean, it was all in the press yesterday, the day before. The McDonald's Instagram seemed to get hacked, and it was all regarding a scam of a cryptocurrency named Grimace that was involved. But how much, when we're seeing these VCs putting money to work, are they generally just wanting equity at this moment? Are any of them deploying capital into tokens or other part of the layer of capital structure?
I think there has been a shift over the last year to invest in more equity deals versus, only token deals that we saw in the last cycle. But honestly, I think even from our viewpoint, a lot of investments are still going to tokens. We're looking at about 70% plus of the projects have some kind of token, whether it's an equity deal with a token warrant or it's a SAF, which is, a promise for future tokens. So there's still a lot of it out there. I think, what investors are betting on is that these tokens will have utility. And if they have utility, then they're out of the purview of, being a security. We just don't know yet. It's still really early, but there are still a lot of investments for tokens in this cycle.
Well, I know you've been doing a deep dive on how the AI and crypto spheres intersect. We'd love to have you back on when you've finished up some of those reports. Robert Lay, Senior Crypto Analyst at PitchBook. Brilliant to have you on the latest quarter of VC. Meanwhile, coming up, Apple's App Store shakeup. What's next at the company's head of apps departs? Meanwhile, we're looking also what's happening in the consumer world. Peloton. Look, we've got to track this stock. Yes, it's not worth as much as it once was, that's for sure, but it's up 26% on the day, now 27% after its fourth quarter beat expectations. This is Bloomberg Technology. Now, after a litany of battles with regulators over the App Store, Matt Fisher, who has run Apple's App Store business since 2010, is leaving the company, according to people familiar with the matter. Bloomberg's Mark Gurman joins us for more. And actually, he's been a veteran of the business for more than 2 decades. Why move on, Mark?
Yeah, that's right. Matt Fisher, the vice president of the App Store business across Apple's product lineup, including Apple Arcade. He's leaving the company in October. This is coming as part of a reorganization of the App Store business. Now, the App Store launched in 2008, and for the better part of a decade and a half, the App Store was the only game in town if you wanted applications on Apple devices, right? You were in Apple's walled garden. You had to work within the parameters of the App Store rules and the Commission and Apple's payment platforms. But the European Union, other regulators, and developers have all pushed for Apple to open up. So Apple really needs to change with the times, especially if it wants this business to continue to grow. So they've essentially split the App Store organization within the company in 2. There's now a team related to the in-house App Store, right, the one that 99% of people are probably going to use. And there's another team now dedicated to third-party app distribution. So that's alternative app stores, alternative payment methods and technologies. And those groups were being run by two sort of younger Apple executives. One is Carson Oliver, the other is Ann Tai. They've been a big part of the App Store for the last several years. And as part of that, Matt Fisher, who has been their boss, reporting to Phil Schiller, an Apple fellow who's ultimately responsible to Tim Cook for the App Store. Fisher is leaving, and the other two executives will now report to Schiller.
But so Phil Schiller stays, and ultimately a lot of this is trying to cross the T's, dot the I's when it comes to regulators. Will it ultimately, will this reorganization be able to make a more streamlined area of communication at least?
What I think this reorganization is going to do is internally put more emphasis on working with regulators and acknowledging that the app paradigm is quickly shifting, right? App distribution on Apple's platforms is no longer going to be only about the App Store. And Apple can no longer be stubborn about that, right? And so it has realized that there's no going back, and things are only going to change, not only in the European Union, potentially in other places, but probably globally over the next 5 years or so. So all of that needs to be re-architected, right? Or developers are going to continue to push back against Apple. Regulators are going to continue to push back against Apple. So they sort of are coming from approaching this from a position of strength, where they're going to enact new changes now. They're going to put a bigger focus on app distribution from third-party methods onto the iPhone. They can't afford to be stubborn about this because ultimately they're going to lose revenue over time and create more issues with developers and regulators. So I think this is a positive move for the company in terms of that reorganization. And you know, Matt Fisher obviously had been dealing with a lot. He had been in a lot of meetings with lawyers. He had been in front of judges, lots of talks going on there with the regulators globally. So that's been a hard job for the last few years.
Well earned rest, maybe. Bloomberg Smart Gurman. Great analysis. Thank you so much, as always. Meanwhile, let's just talk about OpenAI, because it is opposing a bill in California that would place new safety requirements on artificial intelligence companies. Now, the Sam Altman-led company joins a chorus of tech leaders and politicians who've actually recently come out against the state-level legislation. Anyway, Shireen Ghaffari joins us for more. So what, they don't like being regulated by California, but they still do say they want regulation.
That's right. The company is saying that they believe that AI should be regulated at a federal and not a state level, particularly because this bill deals with certain catastrophic risks, such as the use of AI to create bioweapons or cause mass property damage. And they think those kinds of threats should not be ultimately left to a patchwork of state legislation.
It feels as though Scott Wiener has made some adjustments, right? Because before, developers could incur criminal penalties for intentionally submitting false information about their safety plans, and now that's sort of been changed up. He's been listening to some of the concerns, right? But it feels as though a whole wall of voices, whether they be private companies or indeed Nancy Pelosi herself, think that this is a misguided set of regulations.
Right. So this bill has received a lot of criticism, both among Silicon Valley investors as well as some other politicians at the federal and state level. However, it still did pass the California Senate by a wide majority, and it's going to be voted on in the House pretty soon. So we'll see how it does in the California's House. But ultimately, Senator Wiener's office has been trying to work with the tech community to mitigate their concerns. And as you say, he's taken out any before in a very limited capacity. If someone lied under oath about their AI model safety testing, they could be accused of perjury and could have some criminal penalties there. Now that's totally removed from the bill. It's only civil penalties. So we'll see if that's enough to appease his critics, but we're still seeing a lot of controversy and debate about this bill, and with OpenAI a formidable opponent and company going up against it.
I mean, ultimately, if it did get passed, Gavin Newsom would then be analysing it. But very briefly, Shireen, does this help or hinder, from your perspective, smaller developers, smaller startups, not just the massive OpenAIs?
I think a bill like this, it's really up for debate. I hear some smaller developers saying they worry that if a company like, let's say, Meta, which provides major open source models, starts to limit offering those open source models because it's worried about liability through this bill, that could hurt them. But I also hear arguments that this would kind of level the playing field and make sure that everyone's on the same page and around safety, and that no one can kind of skate by with doing less than what's responsible. So it's really out to the jury and ultimately, as you say, up to Governor Newsom, ultimately, if this bill does pass, to either sign it or veto.
Shireen Ghaffari, and the latest on legislation coming from California or not, as the case may be. We really appreciate it. Meanwhile, coming up, influencers, well, they're getting the VIP treatment at the DNC. Bloomberg is live from Chicago for more. Before we go there, we've got to take a look at some movement in terms of individual names. I mean, just look at Snowflake, off by more than 13.5%. Brody Ford, reporter on this, telling us earlier that really this is a company that is at the moment failing to show it can make the pivot into the world of artificial intelligence for its own use case of software at the moment. Its numbers and forecasts not living up to expectations. This is Bloomberg Technology. It is day 4 of the Democratic National Convention, where presidential nominee Kamala Harris is set to speak tonight. Among those attending include a slew of social media influencers getting the VIP treatment at the event. Our own VIP is there, Bloomberg's Brad Stone, live in Chicago. And give us the feel of what last night was like. There's a lot of heavy hitters, a lot of internet reaction to it all.
Hi, Caroline. Yeah, no, I mean, it was an amazing evening, lots of memorable speeches. Oprah calling for common sense over nonsense. Tim Walz, the appeal to patriotism. Hakeem Jeffries, I thought, was very memorable, saying, "We broke up with you for a reason," talking, of course, about Donald Trump. But look, I mean, this is sort of the triumph of a vibe-based convention. Not a lot of policy details, general kind of nods to affordability and lowering inflation. But look, this is a different kind of convention. The Democrats clearly believe they can win by making one point, and that is, we are the good guys.
One point, whether it be through speeches, through rap, however you want to be consuming it, it's going to be a massive night now for Kamala Harris as well. And what are we expecting? Any more surprises as well?
I think there probably will be. People are rumoring Beyonce tonight to introduce her. Pink is performing. But look, I mean, I do think she has to get serious and tell the American people, tell the voters what she wants to do in office. I interviewed here Deval Patrick, the former governor of Massachusetts, and I asked him whether, he believed Donald Trump's insinuation that black voters are moving away from the Democrats. And he actually said, that might be true. Democrats have to do something to make their appeal directly to those voters. And I do think that is kind of the challenge for Democrats tonight. Tell voters what you want to do, how you're going to lower prices, what the concrete proposals are. So I think we're going to get, more of the broad appeal, more of the we're the good guys, but also perhaps from Vice President Harris, a little bit more of a vision about what her priorities are.
I mean, I hate to bring it back to tech, but I will. Will you see any sort of nuance, any proposals that affect the tech community? There's a lot being talked about in terms of taxes, for example.
Right. I mean, I don't think so. We saw a couple of weeks ago, Caroline, when Reid Hoffman, of course, the venture capitalist, talked about replacing Lina Khan at the head of the FTC. And the progressive wing of the Democratic Party really rebelled against that a donor would be calling for that. I mean, these are issues where Democrats themselves just don't agree. And I think, this convention is focused on unity and defeating Donald Trump. So I think tech brings forward some of those hot button issues that they would rather leave to another time.
Brad Stone, we so appreciate it. Enjoy Pink, maybe a little Beyonce as well later today, and of course, listening in on Kamala Harris. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget to check out our podcast. You, of course, can find it on the terminal, as well as online on Apple, on Spotify, and on iHeart. From New York, wishing Ed Ludlow getting well in San Francisco, this is Bloomberg Technology.